Let's get more on this now with Rob Henderson of the National Australia Bank in Sydney. So did this decision take you by surprise?
Well, Maryam, it wasn't a complete surprise because the Reserve Bank has been sending out a few signals indicating that it was preparing to pause in its tightening cycle. But from the point of view of the markets, there was around 20 economists surveyed recently, and all of them expected an increase in interest rates today, and the market had priced about a 70% probability of a rate hike today. So certainly, you know, that it was a much weaker result than expected, and the market reacted accordingly. The 3-year bond futures, for example, yields fell by around about 20 basis points, and the Australian dollar just fell like a stone. It lost about a cent immediately after the Reserve Bank's announcement at 2:30 Australian Eastern Time today.
Given economic recovery in China, we saw, I think, 10.7% GDP expansion in the last quarter. Of course, China being Australia's largest trading partner, we've seen falling unemployment in Australia and a 13.6% surge in house prices for 2009. All this would have justified a rate rise, wouldn't it?
Well, yes, we'd agree. And in fact, you know, we thought that from the last board meeting in December, where the Reserve Bank from then on had started to indicate that they were considering pausing, our view was that the run of data over our summer here had been strong enough that it would force their hand and they would go again. But in the event, they haven't. And when you look at their statement, the reason for that is because the banks have actually increased rates by around 100 basis points for borrowers. By that I mean the commercial banks. Now that is in excess of the 75 basis points tightening in the Reserve Bank's cash rate. So they're basically saying, look, borrowing rates are up by 100 basis points. That's a hefty rise, and we need to take some time to see what the effect of that is, because monetary policy works with a lag. They also mentioned, Maryam, that the slowing in China that the authorities are putting in place, and also sovereign debt issues globally, and I guess by that they're talking about Dubai a while ago and Greece, both of those things, just put a few more question marks over the global economy.
Can I just quickly ask you, do you think it could be counterproductive, very briefly, could it be counterproductive to be raising interest rates at this point in time? For example, a report yesterday by Australian Finance Limited Group said that that borrowing for home buying fell to a 5-year low last month, which indicates that rate increases could be restraining the mortgage market.
Yeah, well, I think there are a few signs developing showing that we're seeing a bit of traction from the rate hikes so far. Our own NAB business survey today showed a sharp drop in business confidence about the future, and we saw a drop in job advertisements from ANZ Bank series earlier in the week. So there are a few signs suggesting that the increases in interest rates are starting to slow the economy down. But I would say, however, that the Reserve Bank themselves say that they need to increase interest rates further down the track. So what we've actually got at this point in time is a good opportunity for anyone that needs to hedge.
We definitely appreciate your thoughts on that. Rob Henderson of National Australia Bank in Sydney.